Hello, this is Simon Thompson, Vice President and Wealth Advisor at Texas Legacy Wealth Management. Welcome to our monthly market update for September 2016. We're going to walk through the major market events of the month. September 2016 saw the S&P 500 continue to trade in a range, moving less than 3 points or about 0.1% for the month. This wrapped up a solid quarter for the S&P 500 as the index gained around 3%. With that gain, the S&P 500 is now up about 6% on the year and a very solid 18% from the lows in February. After the worst ever 28-day start, it was hard for many to imagine that the market would bounce back. Yet here we are, challenging the all-time highs set in August. Whether or not we see new highs soon may be impacted by some key factors that we saw highlighted throughout the month. One of the factors to watch, as it has been for the last few years, is the Fed. The Fed met this month and made no changes in interest rates, as was expected. The market and investors pored over the outcome of the meeting, which included the much-discussed dot plot. The dot plot gives us a quick look at where each Fed official thinks rates will move over the years to come. Rather than dissect this chart, we feel the more important message coming from the Fed is that if and when they continue to raise rates, they'll do so at a slow and steady pace. Per LPL Financial, a slow and steady rate hike environment has historically been just fine for stocks. In fact, LPL has shown that since 1960, the average number of rate hikes between recessions has been 18. Since the end of the Great Recession, we've had 1. We may have more room for this economy and market to run. As the U.S. presidential election draws near, not a day goes by without analysis of what each candidate will mean for the economy and for the market after the election. Looking through a different lens, the market may be telling us who the likely winner could be. The data shows us that if the market is positive for the 3 months leading up to the November election, the incumbent is more likely to win. Whereas if the market is down, it's more likely the challenger will be victorious. Since 1928, the market has an 82% success rate at predicting which party will win. So where do we stand now? From July 31st through the end of September, the S&P 500 is down a mere 0.25%, giving us no clear indication of where this indicator might end up at the end of October. As we look toward October and the last quarter of 2016, there's still a great deal of uncertainty hanging over the markets. In fact, since 1950, October has been the most volatile month for stocks. With the various events on the calendar and the continued evolution of the Brexit, the U.S. election, and moves from central banks around the globe, this could certainly continue to be the case this month. However, we continue to feel that positive returns for stocks by the end of the year are possible, especially given the continued solid U.S. economic data. We believe now is a great time to review overall asset allocation, particularly if the volatility we experienced throughout this year has been uncomfortable. The recent rally has presented a good opportunity to address asset allocation and ensure it's in line with long-term goals and objectives. For more information about Texas Legacy Wealth Management, you can contact us via phone, email, or feel free to visit our website. We'd also like to remind you to follow us on Twitter and like us on Facebook. Thank you.